Heard of quantitative easing, but what on earth is quantitative tightening? Quantitative tightening is a monetary policy used by central banks. Unlike quantitative easing, which increases money supply, quantitative tightening reduces it. Think of it as the opposite of QE. How does quantitative tightening work? Basically, by selling government bonds or other financial assets. Central banks hold large amounts of government bonds and other assets. In QE, they buy these assets to inject money into the economy. In QT, they do the opposite. They sell these assets, and central banks sell bonds, investors buy them using cash. This cash goes to the central bank, effectively removing it from the economy. With less cash available, the overall money supply in the economy decreases, and thus not reinvesting and maturing these securities. Banks also have bonds that eventually mature. The bond's term ends and the principal amount is paid back. Normally, central banks would use the money from these maturing bonds to buy new ones. This practice is called reinvestment and helps keep the money supply stable. During quantitative tightening, they stop reinvesting this money, and as bonds mature and are not replaced, the amount of money in circulation decreases. With less money circulating, banks and financial institutions have fewer reserves. This reduction in reserves makes money scarcer. When money is scarcer, borrowing becomes more expensive. It's basically basic demand and supply. Less supply equals higher costs. As a result, interest rates can increase as banks charge more for loans. Higher interest rates make loans for things like homes, cars, businesses more costly. This can slow down spending and investment, as people and businesses are less likely to borrow. By reducing the money supply, central banks aim to cool down economic activity. This is especially useful if the economy is growing too fast, leading to high inflation. Quantitative tightening helps to balance economic growth and maintain price stability at the same time. It's a careful process because too much tightening can lead to a recession, while too little might not curb inflation effectively.